Bitcoin investors may be thankful to see Monday's rebound. Hey everyone, I'm Jenny Horne, and this is Crypto Corner right here on Schwab Network. An early happy Thanksgiving to all of you, and especially to our guest today, Adam Lynch, Director at Schwab Equity Research. So Adam, thank you so much for hopping on. As always, let's talk about this month's weakness in the overall crypto space. As we know, JPMorgan's team has been very busy. They did share some insight about some of these ETF flows. So tell us a bit more about this news.
Sure, Jenny. And thanks again for having me on. It was the larger crypto native investors who were blamed for October's correction, mostly due to some deleveraging in perpetual futures contracts. But all of that activity had calmed down by the start of November. Even so, the trading activity that we've seen this month reminds me of February and March, which was the last time we saw a broad sell off in these products. So far in November, retail investors have sold over $4 billion of spot Bitcoin and Ethereum ETFs. This, according to JPM, has been the main driver of the latest crypto market correction and exceeds the outflows that we experienced earlier this year. The interesting thing is that at the same time, these retail investors have poured nearly $1 billion back into equity ETFs, including leverage products, helping highlight how this crypto sell off doesn't really seem to be part of a wider retreat from risk. So it would probably be a mistake to essentially extrapolate the selling of these crypto ETPs as a signal that retail investors are turning bearish on the market. However, JPM analysts have noticed a pullback in the most speculative part of retail, those traders who are active in trading call options, which may be a sign that the more speculative investments are being looked at with a more discerning eye. Now, longer term holders appear to have bought the dip in Bitcoin and Ethereum, and last Friday was the first positive flow day for Bitcoin ETFs in a week, hinting at some stabilization. We've also seen some stability in the market over the past couple of days as the probability for a December Fed rate cut has increased back to over 80%. And then the last thing I want to point out about this Bitcoin sell off was that it was overwhelmingly a US session phenomenon the past month. I saw a report from Van Eck that said that in terms of cumulative returns by session from October 24th through November 24th, Bitcoin was down 20% in the US, but less than 5% in Europe, and its return had actually been positive during market trading hours in Asia during the past 30 days.
Okay, and also from the JPMorgan team, they did change some of their ratings on several Bitcoin mining companies. So, what really did we learn from that?
So, what did JPM do this week? Well, first, they refreshed their overall outlook essentially on Bitcoin miners and high powered compute or HPC data centers, noting that the sector is entering a more higher conviction phase of these transactions. And there have already been many long term AI related deals signed in the industry since September. These include major contracts with AWS, Google backed Fluid Stack, and Microsoft. Now, to the specifics of the changes that they made. So, Cipher Mining was upgraded from to overweight from neutral, and its price changed from $12 a share to $18 a share, with analysts calling the recent 45% pullback in its price a nice entry point. CleanSpark was also upgraded, but with its price target maintained at $14 a share. And then we had Iron, Mara, and Riot, which all had their price targets cut, mostly due to declining Bitcoin prices and rising network hash rate. JPM also marked down the value of Mara and Riot's mining operations by about 50%. Now, I think it's always important to point out how rare it is for analysts to actually downgrade stocks or to issue sell or underweight ratings. If we look at all of the buy, hold, sell ratings available, 55% of them are buy, 40% are hold, and only 5% are sell, which is why I always encourage people to dig a little deeper when they see these price target changes or upgrades or downgrades. Take Cipher and CleanSpark, for example. Which one does the bank favor given they were both upgraded to overweight? Well, probably the one that also had its price target increased at the same time, right? So I wouldn't consider the two upgrades equal, and it is important to kind of dig into the details of these changes.
So finally, let's talk Dogecoin. I feel like we're going back about 5 years ago, but it really has gone from this meme coin status to getting its own Grayscale fund. What really does this mean for investors?
Yeah, this has been a fun one. I think my favorite headline that I saw about this mentioned Dogecoin's Wall Street glow up and how it continues. This week, Grayscale debuted the Grayscale Dogecoin Trust ETF with the ticker GDOG. It was actually first launched back in January as a private placement before being converted this week. And it is the second Dogecoin ETF listed following the launch of Rex Osprey Doge ETF in September. Now, the currency's been on a wild ride since election day, falling from about 45 cents a share down to 15 cents. It's a coin that has evolved from this internet meme culture, but into one that now has real world utility as the 10th largest cryptocurrency by market cap. It's been interesting because several of these non Bitcoin or Ethereum crypto ETFs have been launched over the past year, including ones tracking Litecoin, XRP, and Solana. Quite a few of them have been launched recently during the government shutdown as firms leaned on guidance from the SEC, which kind of clarified some of the procedures that they needed to go through to launch these products without the agency's explicit sign off. And I think that these relaxed requirements here will encourage even more products like these being launched going forward, which will just increase the opportunities that investors have to invest in these types of currencies.
Absolutely. And I think a great way to leave it. We appreciate it, Adam Lynch, for all of your insights on the crypto markets. And thank you, the viewer, for checking out Crypto Corner. If you want to watch more, please subscribe to the Schwab Network YouTube channel and be sure to follow us on Instagram, Facebook, and X. That'll do it for us here. We'll see you again next week. I'm Jenny Horne. Have a great Thanksgiving holiday.